most deals are pretty similar, but there are some differences. And most importantly, there's some glaringly bad offers that I think, basic retail. It's not so much picking out the good ones. It's just eliminating the truly bad ones. Nick, so yes, I think, there's clearly a lot of, red flags in the space. And I wonder if you could give me some idea of what you think are the primary warning issues, or the key things that a new retail trader should avoid as much as possible. Sorry, my apologies for the noise.
You're good. Boris, you're a real trader. You've got MetaTrader stuff going on that just.
If you have MetaTrader pings at 5 o'clock, it means you're.
I've got mine that goes off at 5:20 for whatever reason. So, I think there's lots of red flags. There's lots of pros and cons. I think it's kind of like anything else. Whenever something new comes to the world, like for example, we could talk cryptocurrency. Whether you like it or dislike it, its introduction came with a long list of pros and cons. In some ways, it allows people in countries that have their currencies going to nothing to sort of store wealth, but at the same time, it's a ripe and easy place for scams to flourish. So there's pros and cons to introductions of new things all the time. Prop firms taking the trading world by storm. I mean, just from my own memory, like I've been trading for about 7 years. When I first got into this stuff, it was not even very talked about at all. I mean, now I know you guys have more years on me than this stuff overall. You mentioned going back years and years for FXCM and that sort of stuff. And I think that for me, just my take as when I first got started, I had no money. This wasn't even really a pitch. And I could totally see how going back to that time, I didn't have any money to trade. If I heard somebody sort of go on the angle of, hey, look, I can get you $100,000 to trade. You just got to pass an examination. As a new trader, all of that sounds like it makes sense. I think so. In some ways, the pro is, okay, I have no money, but if I really work hard, I can actually make trading worthwhile. Because for people who don't have much trading capital at all, this stuff is completely pointless to even learn unless you want to learn it for 20 years before you actually have saved up money in your life. So I think it offers a way to get involved with the markets for a more meaningful way once you actually have the skills. I think that the big problem and the biggest red flag is that the industry really preys almost in some cases on people not having the skills and not being able to recognize that some of the challenges that are out there, like Mark said, are completely really, really difficult to pass. Now, again, there's we can get into picking prop firms and such like that fit your style and that have more realistic goals and stuff. But again, the last time I was on, we had an extensive conversation about how important it is to find the right prop firm for your style. If you're a swing trader, if you're a day trader, which assets do you trade? How much leverage do you have? This is not something that can be blanketed over and just say, hey, this prop firm picks it all for you, right? It has to sort of be pulled and matched to your style as a person. So that would be my red flags overall, my general view of the industry.
I think those are really good points. But more specifically, Mark, before we even get into the distinct different types of challenges that prop firms offer, let's actually deconstruct the $100,000 offer. I mean, we've been in the business long enough to kind of understand you're not getting $100,000. You're getting $5,000 of the $100,000, right? I mean, that's effectively your cutoff. You blow it through the 5,000 drawdown or whatever drawdown they have. Let's say 10,000 drawdown, but that is their maximum capital risk is 10,000 on you. And they're probably even less than, because they have daily limits and stuff like that. So you're just controlling 100,000 notional, which is still better than nothing. So I don't want to diminish it, but I just want to make it much more realistic. You're not trading $1 million account. You're trading a $30,000 account that has $1 million notional against it, right? Isn't that sort of like the real truth?
Yeah, well, absolutely. They throw these big numbers at you, like getting access to $1 million. That's great. And you actually have that. I guess you can think of it. That's the leverage that you can play with, which can allow you to trade bigger positions. But once you hit that limit, that's really actually all you actually have. But I think there are some good points to that, because if you're someone that can't control yourself, you're better off gambling with someone else's money.
Oh, no, there's no doubt. in comparison to nothing, it's everything. It's just that we're trying to basically understand kind of the realities, warts and all, of the whole business value proposition here. There's no doubt that it's better than nothing, and certainly, if you're controlling million notional, even if you're making pennies a day on that notional, it's dollars to you, because you don't need a lot of leverage to make nice money. And like you said, it's somebody else's money. It's great. Spend a couple of hours a day before work or after work, scalping the S&P or trading euro. You make a couple $100 that without that is not your money. How beats the hell out of watching TV at night, right? So so there's no doubt that there is true value proposition here. But let's get into a little bit more specifics. Where would you say, the hardest or the most glaring red flags in some of the prop firm challenges that you've seen? Like, what are the worst, I guess? And I know, Nick is saying, look, it's to each his own. Every prop firm has different offers, and you got to match it to your own thing. But there are clearly some prop firms that offer good deals, and some prop firms that offer really horrific, basically deals that are unwinnable, that are just unwinnable deals. So can you give me some examples of that what you would consider to be really unwinnable deals that are just off, that are just, where the odds are completely stacked against you?
Well, okay. So as far as, you have to look at a couple of things. Like, for one, what are the risk parameters specifically, right? Everyone has different ones. Right. Are they going to be too tight, which is usually the case most of the time. Right. I think it's a matter of, everyone has their deal, whether it's good or bad, but good or bad is going to be relative to your specific strategy. Really, as a trader, you should be looking at their parameters, and you should be adjusting your style. If you want to go that route, you adjust their style to their risk parameters. You should be able to do that. If you can't do that, that's a lack of experience, right? So if you go into this like, well, I want to be a swing trader, and then you go to this prop firm that it's just not going to be a good fit, you're just handing over your money. That's all you're doing. So it's hard to really pick out, like, what is a bad deal or what is a good deal. Sure, a better deal is going to be a more flexible deal, right? Do they let you trade through news? Yes or no? Do they let you hold, after Friday? Yes or no? Do they let you hold overnight? Yes or no? Like, you have to be able to answer these questions. The more flexibility, the better. Also, the more flexibility as far as risk. Like, if they give you 10% or 8% or whatever your daily risk is, the wider that is, obviously it's going to be better. So it's the really tight ones that you have to be careful of.
Right. Like, that's what I was kind of driving at. Like, if you have two prop firms, one offering you 5% up, 10% draw down, right? Meaning you got to make 5%, you have a 10% drawdown. Another one offering you 10% up, 5% down, right? If it was sort of equal deals and everything else, clearly the second one is worse than the first one. That's what I was kind of driving at. There are some differentiation. Most of them are actually the business is very efficient. Most deals are pretty similar, but there are some differences, and most importantly, there's some glaringly bad offers that I think basic retail. It's not so much picking out the good ones; it's just eliminating the truly bad ones. What would you say to that, Nick?
Yeah, no, I would agree. I mean, the thing is, so I like every once in a while going to like a casino, right? Like, I think it's a lot of people across the world, they love going to the casino, having a fun time, as long as you're doing it responsibly. I know that when I walk into the casino, I'm not going to likely make money. The odds are stacked against me. I'm not a professional card counter or anything like that. I haven't dedicated my life to blackjack, but I do know from just my little experience, like watching YouTube, where I watch blackjack players, they say most of the time, if you don't understand rules, if there's a lot of side bets and stuff going on the blackjack table, if it's not just straight usual blackjack, odds are it's cutting in further to your side of the table. They're not making the game more complicated or more fun for your benefit. They're making it so that they can find more funny rules and ways to extract money from you. So when it comes to props, I think that, loosely speaking, that there's probably some arguable similarities there. Like, if a prop firm has a bunch of side rules, like some of the ones Mark said were exceptional, can't hold over the weekend, or can't hold into a news event, or just little funny side rules. I know that one of the biggest glaring red flags that I know, and it's a super obvious one, but keep an eye on reviews.